All right. Hi. Thank you for joining me. My name is Leah Parsons. I work with the Idaho State Tax Commission. I'm a tax policy specialist and I specialize in sales tax. And so I'm here today to talk to you a little bit about sales tax Nexus in Idaho. There's been a lot of changes. There's a lot of interest in this particular issue, and I'm excited that you're here with me. I'd also like to thank the Idaho Society of Certified Public Accountants for having us here. This is a great opportunity for us to get word out to everyone on what's changed and how it might affect the businesses in Idaho and outside of Idaho. I'm going to talk a little bit about Nexus in general, how that's evolved over time, Nexus in Idaho, and then we'll talk about navigating the changes that have happened in Idaho, and then we'll talk about resources. At the end of the day, if you won't remember about 25% of what I tell you, but what you will remember is where to find the answers to your questions. So there will be definitely a day when you're like, what was that answer? And you'll be like, oh, I've got her number. And that's a good thing. So let's go ahead and get started then. Nexus in general, for sales tax purposes, is a connection that allows some sort of tie that a person has with the state or a business that allows for that state to require them to collect and remit sales tax. That connection can't conflict with the constitutional Nexus. The due process and the commerce clause are two things that we need to, as a state, make sure that we don't conflict with. So one says that we can't cause a burden on interstate commerce. The other one says it really need to be fundamentally fair to those businesses that are trying to sell into your state. And one of the things that does not conflict with that is the physical presence. I'm sure everyone's heard of having a physical presence within a state, and that is one that definitely is kind of a safe place, and that's where the states have been for years and years. I know that physical presence is created by either having property such as like an office, or you've got some property, the storage unit there, or you've got you're renting or leasing property, or servicing tangible personal property in Idaho. There's a long list of items that would constitute property in Idaho. And the other thing is having employees in the state, having people. So people and property is kind of what everybody focuses on. If you have those, and it's most likely that a business does have Nexus with Idaho as far as sales tax goes. And I won't get into every possibility, but that kind of gives you generally what would constitute physical presence. In 1992, that physical presence standard was challenged. So, over the years, the states, people were ordering online, online didn't exist. They were ordering over like magazines, catalogs, and there's North Dakota went ahead and told Quill Corporation, who was selling off of, they had no physical presence in North Dakota. Let's go ahead and set the scene. They had no physical presence. They were selling out of catalogs, advertisements, telemarketing, and when somebody did order from them, they sent it via common carrier. So when we look at physical Nexus would say, well, no, if they didn't actually bring it into the state and make that sale, if they sold it over here, then it's only taxable in the state that it was sent, right? And then it'd be subject to use tax in the state that it was received in. In this case, North Dakota said, no, you know what, you're making sales to people in our state, and you really need to go ahead and collect our sales tax on our behalf. And it was a pretty big market. I think I even remember Quill. I was doing bookkeeping back then. And this went all the way up to the U.S. Supreme Court, and the court ruled that a business must have a physical presence. So this is like the standard for sales tax purposes. This has been the standard as long as I can remember. And they explicitly said, when they made that decision, they did say that the Congress could go ahead and take a look at that and rework that, make it so that, do something that will make it fair for everyone. And back then, and maybe it didn't make sense to expect every Joe that was trying to sell to know, all 50 states, all the provinces, and it would have been pretty phenomenal for someone to be able to manage that. They'd have to be making quite a bit of money, I would think. Kind of interesting. And following that, the internet became, the World Wide Web started, and the standard was still physical presence. I don't believe that the sales started, probably in the 2000s is when internet sales started to take off. Back in the 90s, I think they were still kind of pushing the World Wide Web and seeing where it could go and where it could take us. It was pretty exciting. But again, physical presence has been the standard. While that has been booming and these different businesses are making sales in different states, new approaches to Nexus expansion have been taken. I thought I'd just take you through a few of those interesting ones. We've got click-through Nexus. Click-through Nexus is a presumption that's created when a seller has a relationship with an in-state business, and that in-state business is doing some marketing of whatever it is that they're selling, and for consideration. So that's kind of an interesting one. I know that more on that in a little bit. I think we had our own version of that in Idaho at one point. Economic Nexus. Economic Nexus is where they would have a requirement to go ahead and collect and remit. So they're taking out that physical presence requirement and saying, no, you're making sales in this state. And so these laws, when they're passed, they're setting like a certain threshold, and they're just saying, if you meet this threshold, or you in dollars or in numbers of transactions, then we're going to go ahead and that tie is created. So now you have Nexus with the state, and you have to collect and remit sales tax. So some states were trying that particular one out. Notice and reporting requirements was one that we had heard of as well. That's where they told like a marketplace or the marketplaces that they'd have to go ahead and provide a list of their buyers from that state and what they purchased. So they could have gotten a list, say, from a big marketplace, all of the, say, Washington businesses or individuals that purchased and what they purchased, so that they could go ahead and collect use tax from all the individuals. And I think that was successful in a couple of states in getting like the big Amazons of the world to go ahead and collect sales tax on behalf of the third-party sales. So that was an interesting development. Marketplace Facilitator obligations. This was a different approach where they said, they're not trying to get them to give a list, but they're requiring them to collect and remit sales tax on behalf of those third-party sellers. And there's quite a few of those that have been tried as well. In 2018, this is our other pivotal case. So we've got Quill, where they said physical presence is going to be the standard, and then we had Wayfair. So South Dakota brought up, and we wondered who would actually take the step forward and try to push the economic nexus. So what South Dakota did is they went ahead and adopted the economic nexus standard. So they said and we'll talk a little bit more about what that standard was, and they said, for Wayfair, who was an online seller, and they had no physical presence within that state, they said, you have a requirement. You met our threshold. We passed this law that says if you sell more than, a certain number of dollars, then we're going to go ahead and require you to collect sales tax on our behalf. You have a nexus with the state. And in 2017, that law was challenged. Wayfair was the one that took up the quill. So that was one question that I had gotten. So why was it Wayfair? Why did they pick on Wayfair? They didn't pick on Wayfair. They set the standard. Wayfair was the first one that stepped up and said, no, we don't think you're right. You don't have the right to do this. And so that's how it ended up going to the Supreme Court. Now in 2008, so the South Dakota Supreme Court ruled that physical presence, they looked at Quill and they said, no, there's a standard that's been set by the U.S. Supreme Court, and that's the standard that was put in Quill. And so the physical presence stands. South Dakota took that to the next level, hoping that the U.S. Supreme Court would go ahead and challenge that and at least hear it, and they did. The results were South Dakota won. The court concluded that the physical presence set by Quill was, they called it unsound and incorrect. This was pivotal. This is probably the most exciting that sales tax has been, and sales tax is not that exciting. No taxes are, but it was really exciting to see like this big overturn and then watch as people are kind of figuring out what to do. And at the same time, a little bit scary. If I'm an online seller, this is really scary. So there's a lot to kind of maneuver, and we're figuring out as we go, definitely. But in this case, the court suggested that other aspects of the constitutional analysis can better and more accurately address any potential burdens. So you remember we talked about the constitutional nexus and those standards that we still have to look out for. So what South Dakota had to do here is go back and have their Supreme Court look at it again and look at those constitutional standards and make their own decision on this. So it's kind of interesting. The Supreme Court also said, or the U.S. Supreme Court, I apologize, also said that there were some things that South Dakota was doing really right, and I think it bears discussion. The first thing that they did is they had a safe harbor in the economic nexus law that they passed. So they said that, they set that threshold. They said it could be either $100,000 worth of sales in the state or 200,000 transactions sold into the state. And they also said no look back. So when you cross that line, then you don't look back and go ahead and collect sales tax on all of those prior sales. They're saying once you pass that threshold, the next sale that you make, you're going to go ahead and collect sales tax on that. And so they saw that as favorable, at least easier for the folks that were trying to maneuver this. The other thing that, another thing that South Dakota did right is they're a member of the streamlined sales tax. I believe there's about, I want to say 25 states that participate in that. It allows for a single registration for multiple, so if I'm a vendor and I decide to go ahead, I'm going streamlined, I'm going to go ahead and apply, I can on one system apply for all of their states. So if I know I'm going to be making sales in all of those states, I can go ahead and put it in all at once, and I've got like half of the United States done, right? It's kind of interesting. They had talked about a year ago adding an option to select the states that you're doing business in instead of doing them all. I don't know if that's been instituted. If you're looking into signing up with them or having a client do that, it might be interesting to find out what they've changed before you send your client to do that. It's very interesting. So not only the unified registration that's allowed by the streamlined sales tax, they also provide software. So a vendor has an option to go ahead and use their software, and that software has tables that are updated regularly. So the states have to agree when they become a member of the state on definitions. So if they agree on definitions, they can tax or not tax whatever they want. They just have to say this is taxable or this isn't. So they all get a definition of diapers. And then, is it taxable in the state? It's a yes or no. So this software is updated regularly with those tables so that they know if they're selling the diaper, they're going to know it's taxable in this state but not taxable in these other states. So it's kind of interesting information. That being said, you also have an option. So that in that case, you would be the one that, in the event of an audit, you'd have to go ahead and do your own reporting, and you'd also have to deal with that audit situation. And otherwise, you can sign up, take it to the next level, and have someone do that for you. So they have something called CSPs, Certified Service Providers, and those folks, they have a list of about 8. It's on their website. Like Avalera is one that comes off the top of my mind, and they have to be certified with the Streamlined Sales Tax Group in order to be a provider. So if they opt to go ahead and get the full package and have somebody else go ahead and do the reporting for them, they can go ahead, they have an audit protection as well. So they don't have to worry about being audited because the CSP will be the one that handles that. So it's kind of an interesting, as a business perspective, I would think that it's not a bad thing. It'd be definitely interesting, especially if you're doing business in all the states. It would allow for some simplicity for signing up for some of them. So, and those are the things that were talked about in the discussion. Now, I'm going to go ahead and switch to Idaho. So we've talked about like the two pivotal cases and kind of how all the in-between where everybody was kind of trying to figure out how do we collect sales tax or get somebody to collect sales tax on these sales being made into our state. More and more like the brick and mortars were not getting the sales. It was going over the, I guess, phone orders out of state, or they were getting them on the internet. So in Idaho, let's just start. Does anybody know when the Idaho sales tax was enacted? Yeah?
1965.
That is correct. That is absolutely correct. In 1965, Idaho enacted not only a sales tax, but a use tax. The sales taxes, or the use tax is complementary to the sales tax. And of course, the sales tax, they define, and we'll talk a little bit more about what a sale is, but if you're making a taxable sale, you have a requirement to go ahead and collect sales tax in the state, if you're making a sale in the state. We also, the use tax is where somebody has brought something that hasn't been properly taxed in another state, and then the Idaho resident that brought it here has a requirement to go ahead and accrue a use tax. They can do that on their income tax return. They can do that on their sales and use tax return if they're a business. And then we have an 850U for big ticket items. And that's about, I won't get too much in the weeds on use tax, so we could have a whole training session on just use tax. It's very interesting though. Yes, sir.
Could you back up one slide?
Absolutely.
One more.
One more.
I think you have a typo on there. It's $100,000 or 200 transactions.
Is it 200? Okay. I will double check that. Okay, so let's just point that out. So on the safe harbor, it's 200 transactions in that state, which I don't believe Idaho did that simply because that's a very low threshold for number of transactions. And if I'm buying rubber bands, that might be a problem.
Yes.
Yeah, so, okay. So moving on, I apologize for that. Okay. So Nexus in Idaho, the physical presence was actually the Nexus that has been Idaho since I've worked for the state of Idaho. And this newest change is very interesting. The first time that I've seen something that equated to kind of an economic type Nexus thing is where Idaho required short-term rental marketplaces to collect sales tax on behalf of their hosts. So we had like the Airbnbs of the world that were selling accommodations, and they were selling them on behalf of another third party, kind of similar to the marketplaces that we talked about before, only this was lodging that they were providing. And they were not collecting sales tax on behalf of their clients, so their clients had to go ahead and figure out the sales tax. And so Idaho took that burden off of the individual or the businesses and moved that over to the short-term rental marketplaces. We didn't have a lot of pushback on that one. There was no threshold that was set. We said if you're making sales in Idaho of lodging, you need to go ahead and collect sales tax on behalf of your clients. And as far as I know, we haven't had much in the way of issues with that. The next year, Idaho passed a click-through Nexus law, which was kind of interesting. We have a good write-up of that on our website in the Sales and Use Tax Hub. I'll be showing you that shortly. But this kind of breaks it down for you. So our law says that if an out-of-state retailer has an agreement directly or indirectly, with an Idaho retailer, and to go ahead and create a referral to that out-of-state retailer's other website, or it could be something, so it can be a link on a website, written or oral presentation, or otherwise. So that leaves it pretty open on what would create this presumption that they're a retailer engaged in business in the state. And for that, there has to be consideration. So there has to be some sort of direct tie between the referral and the revenues that they get. So it can't be a click-through or advertising. It can't be where I get for every click that I get because I put your link on my website, I get 25 cents. So it's not that. It has to be. We have to be able to tie that to an actual referral and then see that the consideration had been received. That was kind of an interesting one. What was interesting, in the preceding 12 months, the sales have to exceed $10,000. Now this law is still on the books, so it may come into play when we're looking at whether or not someone has a physical a requirement to collect sales tax in the state of Idaho. And this would create a physical presence as far as the sales tax collected goes. Okay, the latest and the greatest, we had a bill passed this year that was effective June the 1st that was an economic nexus standard and marketplace legislation. Very interesting. It was House Bill 259A, and there's a lot going on there, definitely. And it was pretty exciting to see it kind of play out. So what we have then, so we've had like the physical presence, so the blue kind of represents the physical presence. Then we expanded that a little bit further, bringing in the short-term rental marketplaces in 2017. 2018, we instituted the click-through nexus, and finally added the 2019 marketplace legislation and the out-of-state retailer type of legislation. So creating a requirement for folks that didn't have an economic, or that only had an economic presence in the state, to go ahead and collect and remit sales tax. So very interesting. Now the other thing that this legislation did, which required us to do a couple of other things, was it required, instead of going straight to the general fund like all sales tax revenues do, or most of them, it has the funds or the taxes collected and remitted by certain entities going into a special tax relief fund, so that it can be used at a later date by whoever the legislature decides, however they decide to do that. Now we have to look at, okay, how do we earmark those? So from the time that the law passed until June the 1st, and actually still now, we've been working on making sure that we can identify each of these types of sellers and make sure that their revenues are going to go into the right spot. It's been very interesting. To that end, I mean, navigating these changes are going to be really difficult because there's a lot of twists and turns along the way, definitely. And so I created some questions to kind of help us walk through, okay, if your client's going to come to you and they're going to say, you know, I don't know if I have Nexus in Idaho, or I don't know if I should be collecting sales tax here, and it kind of walks you through the steps that you should look at to see if they do have a requirement. And we'll talk more about the laws that have changed, which is very interesting as well. And I'm going to go ahead and grab a drink really quick. So the first thing is assessing your client's activity, and that is, you know, basically, is your client making sales into Idaho? I should say in or into Idaho. And that would be the first step. And in order to do that, it's important to understand what a sale is as far as sales tax, the Sales Tax Act goes, right? It has a law that says all of these are a sale. And so I was going to kind of take you through each of those. Of course, there's the sale of merchandise, the sale of tangible personal property for consideration. That's the easiest one. Everybody knows that. Everybody goes grocery shopping, and so they know what that sales tax is. We have, and then it says, and then all of these other things that aren't the sale of tangible personal property are also subject to sales tax. So there's sale as defined by the Sales Tax Act. So these are all the types of sales that we should keep in mind if we're asking our client, or we're trying to figure out if they have a requirement to collect sales tax. So producing, fabricating, processing, printing, taking something that someone gives you and changing that tangible personal property is basically it. It can be a part in a process. It can be something that I brought in that I want, so I'm a contractor and I have a gate that I'm putting on a house, and at the last minute they decided they wanted a different color, and so I'm having somebody like put a coating on that so that I can put up the gate. Something like that would kind of meet this. We also have the special order. So everybody's done a special order now and again. So if I order something that's produced, or fabricated, or printed, wedding invitation would be a good one. In my picture, I chose a centerpiece, which I thought was lovely. And then the furnishing of, or preparing or serving food. So that is subject to taxation. Food, meal, or drinks. We've also got admission to a place or for an event in Idaho. The use or the privilege of using tangible personal property for recreation. Also sales. Providing lodging accommodations is another defined sale. And then, of course, the lease or rental of tangible personal property. So each of these items that I've listed are defined as a sale. And that's in, I should just mention, 6336.12 is the definition of a sale. And then the next statute in the Sales Tax Act talks about the taxable sales price. We're not going to get into that today, but it's good information. It's one that fundamentally everything that I do kind of it's encompassed by those two statutes for the most part. It has to be a sale, and then if it is a sale, how much of that is going to be taxable? Very interesting stuff. So the first question, is your client making sales in or into Idaho? And of course, if they said no, they wouldn't need a permit. But if they say yes, then we're going to ask, we want to make sure they're not wholesale sales. So if they're wholesale sales, then they may not have a requirement to have a permit in the state of Idaho. So if you never make any sales other than selling to someone who's going to resell that, then it would be, you'd be filing zeros all the time. You'd have your total sales, but then your non-taxable sales would equal that. And that seems like a filing requirement that doesn't make sense. In the event that you said no, then we'd want to know more about your sales, right? One thing that I wanted to mention about wholesale sales, so if someone is selling only for wholesale, they would need to go ahead and if they're buying for resale for something that whatever they're making or whatever they're reselling, they can go ahead and fill out the ST101 if they're buying anything in Idaho that they're going to resell or incorporate into something that they're going to resell. And there's a section in section number 1 that allows for them to say that they're buying for wholesale only, no retail sales. That's really important. And now if they're making a retail sale, a sale to the end user, then this is not correct. This is only for someone who's only selling wholesale. So I thought that was interesting information. Now the next question is, we have retailers that are only selling on a marketplace. So if I'm an Idaho retailer and I'm actually selling to the end user, but I'm doing it through a marketplace, then I may not have a requirement to have a permit with the state. So in the event that I said yes, then there's a little bit more that I would want for them to know. And then if there's, the next question would be, are they selling to consumers if they said no? But the first thing that I wanted to talk about was, retailers who are selling through a marketplace facilitator, because the laws changed and required those marketplaces to go ahead and collect and remit on behalf of the third-party sellers. They may not have to have a permit, but they're still at risk. So they need to make sure if I'm selling through someone, say Amazon, I'm going to go ahead and go to Amazon and make sure that they're collecting that sales tax so that I have some sort of report, because I'm going to need to tie my total sales for income tax purposes to my total sales that I've made throughout the year. So it's important to know that those sales need to be not only documented, you need to go ahead and make sure that they, and the other thing is that if the marketplace facilitator is not collecting sales tax on your behalf, you need to go ahead and have a permit and report that on your own. at the end of the day, somebody's got to be reporting the sales tax. Now, the marketplace has a threshold, and we'll talk about that a little bit more in a bit. But if they haven't met that threshold, they may not have to take care of you. So they may be waiting to see if they do. Kind of interesting little dilemma there. So an individual who's only selling in a marketplace may not ever need to go ahead and get permitted. This does simplify things for the guy that's just selling little bits on the internet through a marketplace, because the marketplace is going to go ahead and collect and remit that tax. In the event that we have someone that is doing just that, we're going to go ahead and add a line to the ST 101 for those folks that don't have a requirement to have a seller's permit, but may be buying for resale. And we'll just have a marketplace only, no retail sales section. In section number 1 for buying for resale. So I think that will solve, and if anybody has any ideas, let me know, because this is one that I've come up with recently that may assist with this issue. And then at the end of the day, if they're not selling basically for wholesale, and they're not selling just through a marketplace facilitator, if they're selling to the end or to consumers, the end user of that material, then we'd look at whether or not they have a physical presence in the state in order to decide whether or not they should be collecting. And the reason why, so physical presence is, remember that connection that allows for us to require someone to go ahead and collect sales tax on their behalf. And it's created by people, property in the state. And it can also be a related entity. We won't get too deeply into that. So the physical presence in Idaho, if they have a physical presence and they're selling to the end user or making sales to somebody in Idaho, they need to go ahead and have a permit and collect sales tax in Idaho. If they are not an Idaho, so if they don't have the physical presence, they may not have a requirement yet to go ahead and collect sales tax on their sales. So we're going to look at the threshold for that. So as of June the 1st, 2019, and Idaho law requires a retailer that has no physical presence in the state of Idaho to go ahead and collect sales tax on Idaho sales. That's kind of interesting. It's the economic nexus standard adopted by Idaho. And we do have a safe harbor that was written into our legislation. Number one, we have a $100,000 threshold. So we didn't have a number of transactions. We went ahead and stuck with the $100,000 threshold. And then there's no requirement, and we do have the retroactivity. So when you pass that line, so if you make sales up to 900, let's see, that'd be 99,000, thank you. That number. And right up to that, and then the next sales where you'd be collecting sales tax for that. So it's really important that if you're not a state seller and you are looking at a threshold, you need to keep your eyes on that. Make sure, I know I'm seeing a lot of questions about this as far as, well, what if I sell wholesale most of the time, but then, I have an occasional retail sale or sale to the end user. Does that count into the threshold? And it is. So it's your total sales that you've made in or into Idaho that make up that threshold. And there is no requirement in this legislation to go ahead and collect and remit local sales tax. I think that's really important to know. We do have about 14 areas that are tax, a few different things for the local option taxes. That is not something that an out-of-state retailer will have to worry about. Kind of interesting. Retailer without a physical presence in Idaho. So their sales, and looking at that, so we talked a little bit on the last slide about what that threshold is made up of. It also includes sales that they've made on a marketplace. So if I'm somebody who's selling, say, directly off of my website, and I'm also selling through a marketplace, then those total sales, including any wholesale sales that I've made or non-tax sales, all of those sales in Idaho are equal your total sales. So there have been a lot of people trying to figure out, well, what is total sales? So that's basically at any sale that you've made into Idaho, taxable or non-taxable, that meets the definition of a sale is part of your threshold. A retailer without a physical presence threshold, so we would ask, okay, well, did their sales exceed it? And if they didn't exceed it, they don't have a requirement to collect sales tax in Idaho at this point. If they did, then they may need a seller's permit. So we've got a couple different scenarios so far that we've run into where somebody's required to get a permit, right? If you're making retail sales in Idaho, and you have a physical presence, you definitely need to go ahead and collect and remit sales tax. The second type would be an out-of-state retailer. So an out-of-state retailer that doesn't have a physical presence, if they meet a threshold, then they should be collecting Idaho sales tax. What's scary is this has to happen in all the states. For someone who's making sales in multiple states, it's a lot to maneuver, definitely. And then the next thing that we're going to look at is the Marketplace Facilitator section of this. So we've got those two pieces that we've gone through. Is your client a Marketplace Facilitator? Because as of June the 1st, Idaho law requires Marketplace Facilitators to collect and remit sales tax on behalf of their third parties on sales made into Idaho. Who is a Marketplace Facilitator? So that's something that we've gotten a lot of questions about as well recently. And we've had people sign up that checkmark the box that it kind of sounded like something different. So we wanted to make sure that everybody understood what a Marketplace Facilitator is and what it is not. So a Marketplace Facilitator is someone who contracts with third-party sellers to help them sell their products through a physical or electronic marketplace. So there's something that allows for me to come to you and make my sales. And someone will who receives consideration for performing that contract. So they're getting paid to go ahead and be that Marketplace Facilitator. And then who engages in any of the following. So it's got a list of, they provide payment processing services, offer an acceptance, lists the product for sale, takes orders, advertises, promotes. There's a lot going on there, but it all kind of ties in together and engages in any of the following. So they're going to communicate, they may communicate or offer acceptance. They may own some infrastructure that brings, or technology that brings the buyer to the seller. And then, of course, the virtual currency, which is an interesting one. And examples of Marketplace Facilitators. So I tried to kind of rack my brain on like what I've been spending on, and I've purchased on Amazon before, and they're a good one because they kind of make sense. You can tell even when you're buying there whether you're buying through a third party or you're buying from Amazon direct. So they have both make their own sales and they have third party sales. So this new legislation would definitely affect somebody that had both of those in play. We have eBay was another one that you can go ahead and put your stuff out there. I don't know if they still bid, but I do know that I can buy something on eBay. So when I've been searching for something, I've been able to find it on there. Who aren't Marketplace Facilitators? So advertising is not a Marketplace Facilitator. If I can place an ad, so I sold my son's car a couple of years ago on Craigslist. Craigslist is not a marketplace. You have to call me, so I put the ad out there, but I'm not going to go ahead, I can't facilitate that sale. They have to go ahead and call, and then they'll come to me, and it'll be a transaction between myself and that other individual. So it's basically advertising. It's an ad that we've placed. And then Nextdoor Neighbor is an app that I happen to have. It kind of lets you know when stuff is, what's going on in your neighborhood. And they also, actually, you can, if you have something that you're selling, you can put it out there and maybe somebody might be interested. So I've seen a few of those ads. That, again, is not someone who's providing marketplace services. Now, there have been like some changes in some websites. I'd heard that like Facebook was gearing up for full marketplace sales, so being a full marketplace facilitator. Originally, when they started, they were not. It was just like placing an ad originally. So it was kind of interesting to watch everything evolve, and I'm sure they'll come up with something brand new very soon. Guarantee it. Safe harbor. So I wanted to talk about Idaho law as far as the safe harbor goes. What was written into there is of course, a $100,000 threshold for marketplace facilitators. Important to note, that includes their sales. So if they're doing both, it includes their sales individually, plus the sales they're making on behalf of the third parties. They have no requirement to collect and remit on behalf of the local option taxes, so they don't have to worry about like our individual cities that do have taxes. And they also have a little bit of protection in the event that me as a third-party seller on their website, if I give them misinformation, and that leads to, say, a liability associated with errors, then they're protected, and the state would have to look to me for those errors that I created. So I'm not exactly sure how that'll play out, but or if we'll ever see anything like that. But it is interesting. Yes, sir.
So how do the marketplaces work if somebody's making wholesale sales on the marketplace? I don't even know if they do that.
No, I imagine that they do. I've talked to a few people that have called in and they're selling. I don't know if they're selling on marketplaces though. I imagine that the big guys have something that allows for an exemption to be claimed, but I'm not familiar with it enough to know.
So would they collect the ST101s just like any other retailer?
If we would expect them to do so. Now, I don't know that they would choose to do so. They may say, you know, we can't sell you this. I mean, they could take that stance. But theoretically, I would expect for them to go ahead and have something on file. So me as an auditor, which I did used to be a sales tax auditor, as an auditor, I would expect that any non-tax sale that you make, you need to document. And I have told a lot of people that are trying to maneuver this market, if you're trying to sell into a state and everything that you sell is exempt, get exemption certificates, keep them on file because you can be protected. At least that amount of your sales are going to be documented as exempt sales. So I think that is one way that definitely an individual who's selling out there can deal with that. So I don't know if I answered your question properly, but I don't know.
Thank you.
That's the right answer. Marketplace facilitators without a physical presence. So marketplace facilitators without a physical presence, they have that threshold that we talked about. So their own sales and their third-party sales. Doesn't matter whether they're taxable sales. It just matters that their sales in Idaho or into Idaho, and that makes the total sales. And so if they exceed the 100,000, then they have a requirement to collect and remit on behalf of on their own sales and their third-party sales. Now, if they do have a physical presence, that's where that changes. So in the event that a marketplace facilitator, an Idaho marketplace facilitator, needs to collect sales tax as of June the 1st. We've had quite a few calls about this too, because there's a lot of twists and turns here, and it's confusing. So if I am, say, I'm trying to think of an Idaho business, Lane Bryant is a store that I shop at. I have no idea if anybody's ever heard of them, but at that store, if I decide all of a sudden as an Idaho retailer that I'm going to go ahead and let people sell maybe some of their clothes that they've bought on our, at our store at second hand or something like that, and they can post them out there, pictures of them, and I'll facilitate that sale for them on my website. That kind of puts me in the Marketplace Facilitator situation. In that case, an Idaho retailer has 45 days from the date that they've decided to go ahead and facilitate marketplace sales to become permitted and to begin to collect and remit sales tax. If they're currently already, there is no break for that. So if I'm already selling as of June the 1st and I have a marketplace, I need to collect and remit sales tax on all of my sales, even those that I facilitated for a third party. Now, the other important thing is we need to earmark those for the special fund, because any marketplace facilitator sales don't go into the general fund. They're going to be put in another section. So the way that we've done that is we went ahead and added a box to check on our IBR, and we'll see a picture of that in a minute, that lets me put I'm a marketplace facilitator or that I'm an out-of-state retailer. And so in the event that you meet either of those, it's important that you go ahead and check mark that box so that we know where that needs to go. There's been a little bit of confusion about that as well. So in the event that they have a physical presence, again, they need a marketplace facilitator seller's permit. So we'll be actually sending out a seller's permit that has a different name. And in the event that they don't have a physical presence, then we're going to look at that threshold again. And that threshold, of course, was $100,000. You exceed that, then you have a requirement to go ahead and collect and remit on behalf of your clients. And talk a little bit about getting a permit. So our website is, of course, tax.idaho.gov. And if you go to the Sales and Use Tax Hub, which I'll show you in a minute, it has a section that that talks about permits. And from there, you can go ahead and find where to get a permit. But we use the businessidaho.gov, the Idaho registration or business registration system. We've been working on streamlining some of those questions to help folks navigate through this a little bit better. Right now, we've just got a little bit in there as far as like tip text to explain what we're asking when we ask a question. And so we're working on streamlining that. So you could fill it out online. You could also fill out a paper copy, which we also have on our website in the same spot. That allows for someone to go ahead and maybe go a little bit quicker. When you get on the website, you're going to be answering a lot of questions, and those are questions that are because you're applying for multiple possible agencies. I believe the Department of Labor also receives these applications, the State Tax Commission, and off the top, I'm not sure who else is part of that, but I know there's multiple agencies, which is great. But then if you're applying for like a second permit or a third permit, it can be a little bit of work, definitely. Okay, and in general, the permit application process takes about 10 days. What I wanted to say, though, is just point out that it does take time. So your client should be looking at their sales, and they should kind of know when they're going to hit that threshold. Some of the errors that I anticipate that folks might run into is if somebody's watching it really closely, they're waiting to kind of flip that software switch, and maybe once they're told to flip the switch, maybe accounting doesn't know that that's been, so they need to make sure that they're streamlining the process so that they don't begin collecting and not remitting before they've even applied for. So that's a possibility. I've heard of that happening in one of the trainings that I went to, some of the larger businesses where they've got a lot going on, and A didn't connect with B, and therefore B didn't know that the flip had been, or the switch had been flipped, and they were collecting sales tax in Idaho. So there are ways that you can report that to the state, and I won't get too much into those. So knowing when you're going to hit that, being aware of where your client sales are going into, teaching them just basically to be aware and responsible for where they're making those sales, because it's a little bit scary, the idea that so many states are looking at your sales. On our website, you go to tax.idaho.gov. On the main page, there's an orange box off to the right side. Those are our sales and use tax hubs. There's on the slide, there's a copy of what that orange box looks like. And if you choose the second from the bottom is a sales and use tax hub, and that takes you to where everything sales tax related is. There's more information about this bill and the law associated with it, and links to the House bill under online, I believe it's online sellers. And then under permits is where you would go ahead and look at, okay, well, if I need to apply for a permit, you go to a new business application. So there's a link there. That's very good information. And then if you just, in general, we have been working really hard on getting our guides put together. We're working on getting information for different industries to make sure that they can navigate all sales tax issues. It's definitely more than just multiplying everything times 6%. I promise you that. So as we get these updated, we're putting them out there for folks on the Sales and Use Tax Hub, and I think this is a really good resource. So I want you to, if you take home nothing else today, take home that you can find information on this website. It's great. I also would like to point out, so I'm also the chair of the Sales Tax Rules Committee, and further down on this page it has a section that is for law, rules, and decisions, so decisions made by the State Tax Commission, and those will take you to the different places where those reside, as well as a link to the committee and what they're working on and who's who sort of thing. Kind of interesting. And staying informed. So I would recommend that anyone who has an interest, especially a CPA would have an interest, signing up for subscribing to the Tax Pros section. You can go ahead and sign up for either general news from the Tax Commission or tax professional news. Note, if you get tax professional news, it will be for all tax types, not just sales tax, so depends on what you're looking for there. I think it's great information. I actually subscribe myself because then I can find out what everybody's up to. We also have, you can follow us on Facebook, Twitter, and Instagram. So some of our classes, we've been putting them out there so folks know. We've been working on providing classes in different industries. If you have something that you're interested in having us do a training on, let us know, and maybe we can put something together and make it available to the public. I think that would be very interesting. We've been talking about ideas for new training. So far, I spent a lot of time doing automotive dealer trainings. I've got another one this week on Thursday, and you can attend via Adobe Connect, and you can also get CPE credit for that. One thing that I wanted to mention, there are additional classes. So this I would recommend for your clients. So if you've got a client that's a brand new business owner, the Business Basics class kind of walks them through withholding and sales tax. It's a really high level information, and they partner with the U.S. Small Business Administration. Okay. And that partnership allows for the small business owner to go ahead and hear first about regulations, and they also get to hear about how can I grow my business, what's available out there for me as a small business owner. So I think that's great information. I've really enjoyed going to these classes when I do get the chance to answer questions. And then, of course, for more information, you can contact us, and I will provide my contact information directly to the society in case you'd like to put that out there. And thank you for joining me. Now, before we wrap up, does anybody have any questions that they'd like to, something that maybe I didn't get to?
Well, I had two questions for clarification.
Okay.
So if my client is an Idaho retailer, the retailer already has a seller's permit, but then we've discovered that retailer is also a Marketplace Facilitator. Does my client have to get another permit, have two separate permits for sales?
That is correct. So the law says that anyone that's the Marketplace Facilitator has to get a separate permit to report those sales. So earlier we talked about like the marketplace that's making their own sales and the marketplace that doesn't have a physical presence, that is making their own sales, and one that is making the third-party sales. They have to have a separate permit for both of those. That is true also for the Idaho retailer that is making marketplace sales. So they'll have to have a regular Idaho seller's permit for their Idaho sales, and then they'll have to have a marketplace facilitator permit as well.
Okay. And then one other question for
Yes.
you. If I have a client who is an out-of-state seller and signs up to get a permit with Idaho, and then the client, for some reason, has physical presence in Idaho, say they build a store in Idaho, they don't have to do anything, right? They're just collecting the tax? Or if they're out of state now, they've got physical presence, do they have to do anything separately?
Yes, we would need to know that. So in understanding that the tax that's collected by this entity when they're an out-of-state retailer without a physical presence, that goes in, remember, into that special fund, whereas once they gain that Idaho presence, we need for them to let us know, because they'll get a regular Idaho seller's permit, and that'll go to the general fund. And we're kind of trying to work up awareness on that. I know that we are sending out with a flyer to kind of let people know that there have been changes, a flyer with their permits that go out this month. I don't know if they've already been mailed or not, but I help prepare those. So just to create awareness. And so you might even, actually these folks might even have clients that are asking, okay, what happened? And so this will really help them understand a little bit better what happened. So that was a very good question, both of them, definitely. Anybody else? Okay, well, thank you for joining me, and it's a pleasure.